Hi, it's Nigel Baker from Scientium here, and in this module we're going to be talking about the different types of investments that you can have in your super fund. If you've been following the modules down the list, we've now had a course on what is super, understanding the structure, understanding how you get your money into it, understanding how important it is because it's your money and how much say you can have around this. So today we're going to talk about investments. Now, it's a relatively quick video. We could talk for hours about this. There's books that are hundreds of pages long on this topic. We've got a book as well, which if you reach out, we can send you a free copy of that as part of a subscriber. So I'm just going to talk generally around this. So this is our course material. We've been running through some flip charts here. But the important thing about your super fund is understanding what you're investing in, because the asset classes, or what we would call, if you're investing in shares or property, they make up your super fund. You're investing in all these shares, and most super funds are investing through managed funds, a range of managed funds, which basically is just a structure that lets you buy hundreds and hundreds of different shares under one fund rather than you buying individual shares. As that industry evolved, when super funds came out, you'd have to go and buy individual shares, very costly and also not very efficient. So managed funds became much more popular, and now they've become much more efficient as well. So you can buy what are called exchange traded funds, or ETFs, and they are very efficient, very low cost. Basically exactly the same as a managed fund, but it just trades on the stock exchange. Just makes it a little bit more easy to transact and a bit more transparent. And there's thousands of them. So we're not going to go into that detail just today, but we're going to start with the big picture. So effectively, most funds will look like this on your piece of paper that you get, and you're going to get a split of a nice little pie chart most of the time, and it's going to say to you, okay, what am I invested in? And you might have some shares here, and you might have cash, might have bonds, or often called fixed interest. Another chart here, you might have property, and here you might have sort of alternative assets, and we'll come to that. So generally speaking, most people have shares. Australian International, Australian shares are your big Australian shares, your banks, BHP, Rio. Australia's got a long established share market. We're one of a very well performing market, one of the best performing in the world since inception, interestingly. But that's sort of because Australia's come from an emerging company into a very developed country. We've got great systems, pretty good regulations. You might not always agree, but so we've seen some good corporate governance and those things, generally speaking, in Australia. So therefore, it's a pretty relatively safe place to invest. Some countries in the world, they just don't have a very high level of regulation. So if you're going to invest in their share market, it's a little bit not as, I suppose, regulated. So therefore, people tend to want to invest in more regulated markets. Think US, Australia, London, Germany, those sort of big markets. So you can invest globally, and what these big fund managers do is they'll go and invest all around the world. And as good as Australia is, we all love Australia, we're only a really small little part of the world. So most of the big companies are, of course, listed in the United States, or in big other European exchanges, London and Germany and the like. But the US is still the most dominant. So New York Stock Exchange and the Nasdaq, which is the technology companies. So most super funds will have a fair bit of money in shares. They'll have money in cash, depending on your age. There's always a little bit of cash. The older you are, the more cash you're going to have. Bonds and fixed interest are an asset class it's a huge asset class, quite misunderstood, but effectively a really important asset class. Bonds, effectively, you're lending money to a government or a company, and you're getting a return on that. So it's an investment. They're billions and billions of dollars around the world traded in bonds. Most super funds do have some exposure to that, and tend to be a bit safer than a share investment. Different type of investment, obviously. You're not going to expect the same sort of growth, but over time they've performed a little bit better than a bit of the cash, and gives your portfolio a bit of buffer and liquidity and the like. Again, more course on this, we'll go into more detail, just so you can understand, generally speaking, what a super fund has in it. And typically property, so not normally a house, but we'll have, like the building I'm standing here at the moment, these big buildings are owned by big super funds, big industrial centres. If you're driving around the city and you see these huge warehouses, they tend to be owned by big super funds, big office towers, shopping centres and the like. So you're owning that, and of course they pay rent, and you're receiving the rent from those investments and any increase in price over time. And then alternatives are things like what they call often emerging markets. So you might have some of the funds that invest in some of the more developing markets. Think of your Brazil and India and countries like that. So it might only be a small percentage, or things like venture capital. So higher risk companies that are starting out. So you wouldn't want to have all your money in these investments, but they might have a little exposure in these sort of startup type companies. Not all super funds have that, but you might see that in your pie chart as well. There's all sorts of other things as well. If you've got a self-managed super fund, you might have a direct property, for example. You might have some gold, you might have some metals and things like that. But generally speaking, this is what we see most of the time. And again, there's some rules around that as well. So the trustee has to have an investment strategy, has to be a sensible arm's length investment. This is your money. You don't want to put it all in, a speculative investment that could be worth zero, and the trustee rules don't allow that because they want this to be something that's there for your long term. Yes, you want to maximise your returns, but you want to do it in a sensible and educated manner, and it's not a casino. This is an investment, not a gamble. So I hope that helps. Basic start to it. In all these courses, we're going to go and start going deeper into all these different asset classes so you can understand them better, and you can choose your own adventure really with Scientium and learn as much as you like, and ask as many questions as you like as well. Thanks for listening.